Do you invest in stocks or ETFs or a combination of both? In today's video, we're going to be breaking down my brokerage portfolio, showing you exactly what we're invested in. Now, for an extended amount of time, we did a 3 ETF portfolio. This has since changed to get a little bit more exposure into some other ETFs, including cryptocurrency. So I do want to break this down in the entirety, show you exactly what the last essentially year of investing has looked like for me, the portfolio, how much we put in there, and how much this has grown. Now, looking at 2023 and 2024, both of those were record years for the S&P 500, seeing double-digit growth. And this year, they're expecting the exact same thing, gauging 3 to 7% growth. Some places are saying 5 to 15% growth. So depending on which news station and where you get your information from, it can vary greatly. So let's hop over, break down this portfolio, and see exactly what I'm invested in. All right, guys, so here we're looking at the portfolio. This is through M1 Finance. If you're unfamiliar, I have a link right down below. It is an incredible place for investing. It makes it super easy. And for me personally, I buy and hold. I'm not selling. I'm not trading. I'm not really going through, I don't want to be a day trader. I am one that will buy and hold. And for that reason specifically, I do not hold specific companies, but I hold only ETFs. Now, within ETFs or exchange traded funds, it is a bunch of different stocks that break this and really put this together into a common really strategy that a lot of people use. And it gives you instant diversification. That's the big reason why so many people are into ETFs and why they've become so popular in the last, I believe it's around 30 years now since we've seen the introduction of ETFs. But let's break this down. Now, right in the very top, you can see cash $250. Now, we are putting $250 into this portfolio every single Monday. Monday, the cash goes in there. And then, of course, because today is Martin Luther King Day, we didn't have the ability to invest because the markets are closed. You can also see margin. So I have ability to essentially borrow up to $122,000 on margin, showing our total buying power is $122. Now, me personally, I don't borrow anything on margin. We did for a little while to get the portfolio going, but as it sits right now, in the last year, we are not borrowing anything on margin. And as you can see, the portfolio is just about 150K as it sits today. Now, this is a portfolio that we built in about 3 years, little bit more than 3 years. I believe it was September of 2021. I think it was. But again, I'm looking back at the last 12 months. Even if we look at all, it was September of 21 that we started. So breaking this down again, we want to look at the last 12 months, showing you exactly where this portfolio is, kind of the ups and downs, and exactly what we are putting our money into. So breaking it down right here. So again, 12 months ago, we were at about 87,000 is where this portfolio was. As you can see, 1 year later, we are at 147. So not only including the contributions that we have made to this portfolio, but you put in the growth factor, the market gain that we've seen. Then you couple on top of that the dividends that we earned this year. It showed, and it really proved to be an incredible 2024 overall for the market. And you can see kind of breaking it down how it does mathematically here with M1. It goes ahead. 87 was the starting, 147 was the ending. We put 40 into this. So we did put quite a bit of money into this. This is on average what we do in about a calendar year through regular contributions, through all of our payroll deductions, everything else that we do here. That is how much we put in this year. And I know for a lot of people might not have the ability to do that. But as you can see right here, the name of this portfolio is the Debt-Free Journey. Right back here, that's exactly what we're looking to do. It's a lot easier to invest when, one, you don't have debt. I don't have credit card debt. I don't have unsecured debt. I don't have any car payments. We are eliminating and really got rid of a lot of debt, almost being completely debt-free short of the home, which honestly, personal preference for me is I'm investing a lot more into my stock portfolio. And as you can see, we gained 24.46% in the last 12 months. My mortgage is at 2.5%. So thinking even if I put a lot more money towards the mortgage versus putting it into the market itself would have made a really big difference on how much it grew in here. And essentially there's going to be a point, my 50th birthday, that I'm aiming for to pay off the mortgage entirely, even if we have to cash a little bit out of here and paying down the mortgage essentially for the next 5 years, seeing exactly where it is and just eliminating that mortgage for the 50th birthday, making it a real big difference. Now you'll notice here, we are now invested in outside. We always ran, when we started this portfolio, we had the VOO, the Vanguard S&P 500. That was the only one that we were invested in. That is where we started the portfolio. And overall, looking at the growth that we've seen in here, It's incredible because then we started about 2 years later. We really diversified. We put in the QQQM, the SCHD, and then we had the VOO. Well, about 6 months ago, we did add the Fidelity Wise Origin, the Bitcoin ETF. Now, I wanted some exposure to cryptocurrency, and you'll notice on this right side, when you look at the actual targets, I have 5% of this portfolio that is in Bitcoin because it's already grown at 10.6%. It is up a little bit over the 5%. This, of course, through contributions, are going to automatically rebalance the portfolio as we're making contributions throughout the year. That's the reason why the QQQM was actually at 40%. Through contributions, it is now down to 37. Even though it has grown, and it has grown considerably, it is starting to come down because all of the contributions we're making are going to these other ones that are either underweighted. And even here, it'll put money when I put the 250 into the SCHD, into the VOO. Nothing will go into the QQQM, and we will see nothing in the FBTC. The contributions will not go there until this actual, the targets are achieved here. Now, it's very interesting the way that M1 Finance does this. They actually break it into percentages that you put into each bucket. And what the target is, like I said, this is almost an automatic rebalancing tool that they have within here. But I want to break this down because looking again, last 12 months, you can see QQQM came out on top through regular contributions, putting money in here, 27.67%. Now, this is the growth piece. When we think of a 3-fund ETF portfolio, this is the big growth piece. This, of course, is very heavy into the NASDAQ 100. That is exactly what it follows, meaning this is going to be really heavy into stocks and really into those big companies that are the growth ones. This is really focused on technology, really big into AI. And as you can see here from some of the trends that we see, big tech can lead again in 2025. AI spending could set records in 2025. Overall, my opinion is we're going to be very poised for a really, and in my opinion, guys, when it comes to tech, looking at quantum computing, thinking of AI, thinking of everything else that is coming up in the next couple of years, it's going to make a big difference when this portfolio, and that is why I continue to make contributions into this portfolio specifically, because I feel like we still have a very big runway with the QQQM. Now, of course, when it comes to overall contributions, when it comes to ETFs, the QQQ is one that we see on the news. We see commercials for it. We see a lot of it when it comes to technology, when it comes to AI. It's very important to have this exposure. And this is the growth piece of the portfolio. You can see right here, we are set at 35%. This is the largest piece when it comes to the portfolio. Me personally, this is again my preference. I don't invest in bonds. I don't do REITs. There's some that I do not, and I do not do anything foreign investing. I don't know the markets. I don't know, exactly those companies. I stay in the US markets itself. And when you start looking at Google, when you look at Meta, when you think of Nvidia, when you think of all of these larger companies, they are global companies in their entirety. Investing offshore, investing into global markets. Again, I don't do the research. I stick to what I know, and I stick to the portfolios that am I aware of. Second one we look at is the SCHD. Now, the first one, of course, like we said, that is the growth ETF. This one is the dividend ETF. Now, this is one that not only had a very strong growth, I mean, a 15% growth, which is pretty good, $1,200 in dividends. Now, those dividends that are earned go right back into the portfolio. So buying more of the QQQM, the SCHD, buying more of that Bitcoin ETF, it goes right back into the portfolio. And this makes a really big difference because as you're doing contributions, as you're earning dividends, they're being reinvested every single quarter. So not only the contributions, you also have the quarterly contributions or the contributions that are going in there, but also the quarterly dividends that are being paid from all of these ETFs. Again, really making a difference when we look at the last 12 months and how much we're putting in here. And it is just really compounding to the big growth factor in there. Now, for me, the SCHD, even looking some of the news down here, there's been a lot of articles, there's been a lot of YouTube videos, a lot of different things. SCHD, a great way to miss out on wealth accumulation. I strongly advise against investing in the US dividend equity, which of course, depending where you look, again, 3 high yield dividends will generate income. There's been a lot of YouTubers included that have really broke it out between JEPI, looking at the SCHD, looking at a bunch of different places. Even here, SCHD versus the VYM, which I do invest in the VYM as well. This chart shows it's time to buy the SCHD. Again, looking at Seeking Alpha, looking at the Monty Fool, a lot of different places will tell you for or against. But again, for me, I am one that buys and holds these ETFs in the entirety. Then, of course, we have the foundation. So we covered right here the growth ETF that we're focused in. Now, of course, this can have a bunch of different ones. There are a lot of different ETFs that kind of do the same thing, that cover a lot of the same ground. The SCHD, the exact same. There are a lot that are the dividend equities, a lot of dividend paying ETFs out there. You have JEPI, you have VYM. There's a lot of different ones, but again, I chose to go with the SCHD. Then we have the VOO. This is the Vanguard S&P 500. This is the foundational ETF that I have. This, of course, is the basis of following the 500 largest companies within the United States. Really solid growth over the last 2 years, like we were talking about. When it comes to next year, I feel like either one, it's going to be a really solid year for growth, or two, even if it is not a really good solid year for growth, if we see the market do a pullback 10, 20, 30%, that is going to be an absolute primed buying opportunity to stock up on the VOO. It's going to make a comeback, and it always has through history. When you start thinking of the US economy and really the ability to buy this even at a discounted price if it's down, I am all about it. So thinking even here, looking at the 12 months, we're up around 4,600 in market gain, 442 in dividends, which again, the dividends are just reinvested in there, putting us at 26.66% in the last 12 months. Very, very good growth out here. BTG and VOO, which one is a better buy? You can see there are a crazy amount of articles that are always and always will be out of there with so many things, what is going to happen, what is better to buy. For me, again, I don't trade, I don't move. We are buying, we are holding, we are really stockpiling these ETFs. And of course, I do have a lot of faith in the United States companies staying again within the US. And the final one that we have is the Fidelity. So went over with a lot of investment advisors, talked to a lot of different people that are investing into Bitcoin ETFs, made the choice on here. It does have a pretty low expense ratio, which I like. Of course, dividend yield for this one is 0. This gives me exposure to Bitcoin and the Bitcoin ETFs. For me personally, I feel like cryptocurrency is going to be something that is going to be around forever. Even looking at the policies that President Trump is now bringing into office, putting regulations around it, making it a lot more legitimate, even buying it to hold in the US Treasury, it's going to make a really big difference when it comes to the price appreciation of these. If and when the US really, Bitcoin hits a record ahead of Trump swearing in, which we know was today, stocks and Bitcoin climb, which we know is happening. Bitcoin hits a record of 109. Getting into this, and again, getting the exposure. The price variation of Bitcoin, it's going to go up, it's going to go down, just like we see with everything. The thing is, it is not about timing the market, and we've stressed this before. It is about the time in the market. When I start looking at this portfolio, like I said, when we go back to all of it, we actually started this going on 4 years ago. September 26th of this year will be 4 years we've been in the portfolio, making consistent contributions in here, thinking kind of big picture. I mean, we've seen over $3,000 that this has generated. So even as a very small portfolio starting out at 0, we've gained about $3,000, so about $1,000 a year. But even looking at the market gain rate here, we're yielding about $10,000 plus a year over the last, 3 going on 4 years. So we have seen a tremendous amount of growth. And even thinking of if we're putting, 30 to 40,000 in this portfolio every single year, you're talking probably within the next 7 years. It's going to be incredible to see. It's going to be well north of $500,000, continuing to grow. And just like we see with snowballs, when it comes to debt repayment, when it comes to investing, it is the exact same thing. Once you start getting, the 50, the 100, the $150,000 into investment portfolios, you see a year of a 24, 25, 26% gain. That portfolio goes through the roof. As we continue to get more dividends in this portfolio, it is going to do the exact same. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think about the portfolio. And as always, thank you guys for watching.